All right, thanks for joining us today, Kevin Sanderlin at Harbor Financial Group. So we're gonna jump right into some different types of lending, just to give us kind of a snapshot of where loans come from. So first, we're gonna look at banks. That's when you generally have large banks like Wells Fargo, Bank of America. You also have your credit unions. Now, these are gonna have the fewest options out there because they only carry their own loan programs. So they're usually gonna have the fewest options. It's also good to know for purchase loans, they tend to be on the slower side because they're geared towards banking. They're gonna have banking hours, 9 to 5. They're gonna have a lot on their plate, working in a branch, being, having customers in front of them all the time. So the banks, if you get a pre-approval letter from the bank, be very cautious, make sure you ask how quickly they can close the loan. And make sure that they can close in the time frame that you need them to close in. All right, then we have direct lenders. They're generally gonna have more options, but still limited. This is much better than the banks usually because they only do loans. So they're gonna be set up to process loans, quickly and efficiently. They will have a wholesale program most of the time. There are sometimes they have a retail program, same with banks. So sometimes you have to go directly to them to get their loan programs, and sometimes you have to go through their wholesale channel, which would be through a broker like myself. So I am a mortgage broker. I'm the number 4 on there. So number 3, another type of lending is private money or hard money. These are good for flips, construction loans, short-term loans. Basically, if you can't get a normal loan, then you're gonna go look at a hard money loan or a private money loan. And I do those as well. Number 4, mortgage brokers. That's gonna give you the most options in terms of loan programs. You have a traditional mortgage broker versus a hybrid platform. A traditional mortgage broker will just broker out to other companies. The hybrid program is what I do. I can either broker the loans out to other companies or my company can fund it directly. We have our in-house underwriters, in-house processors, in-house funders. So we can act like a direct lender or we can act like a broker. So I like the best of both worlds because sometimes for different
So hybrid
situations.
is both?
Yeah, it's
Hybrid is
actually,
kind of like the hybrid car.
yeah, just like the hybrid car, I can switch over to one engine. Yep, and I can switch over to the other end.
Oh, that sounds good.
Yeah, it gives me a lot of flexibility in terms of finding the best loan product for the buyer. Sometimes you want a quick closing. Maybe there's a program that our company offers that just fits, really competitive pricing. We go the direct lending route, or maybe we want to go the broker route because we have a particular program that matches what the buyer needs. So having both available is a huge asset there.
You can put that maybe
To the
like,
side.
yeah, like,
All the way.
on the, the little square, so it can just be one,
These?
no, the next to it.
Yeah.
The next,
That's
that one.
okay.
Uh-huh.
Okay, yeah.
Mhm.
Thank you.
Yeah.
So the advantages of having the hybrid model, oops.
Yeah.
I'm not used to looking at that. So the advantages of having the hybrid model is that we get the best of both worlds. We get to decide whether to fund the loan directly in-house or broker it out to a wholesale lender. We partner with 170 wholesale lenders. Most mortgage brokers have about 20 or 30, maybe 40. So to have 170 lenders puts us as one of the most robust mortgage brokerage companies in the state. Just tons of options. And that's why, one of the reasons why I decided to talk about loan programs today, because it is one of the things that sets me apart with other lenders, is I have the ability to finance things that other lenders can't do because they don't have the products for it. So now we'll get into the different loan programs. And feel free to ask any questions if you like, because this is not a very in-depth class on loan programs. This is just gonna be like a real simple list here. So we have FHA, VA, USDA, and conventional. So these are the most common types of loan programs we're most familiar with. The next most common would be the zero down loans. We have the VA, USDA, CalHAFA, FHA, plus the down payment assistance program, and the Golden State Finance Authority. So those are a lot of different options for someone who wants to do a zero down loan. They don't have enough money for the down payment. Well, we can still look and see if they qualify for one of these. And of course, each one of these has their own different criteria. So if there's a specific question that you think of, feel free to just throw it out there. We'll probably get more people coming in since it's almost 1:30. We just started a little bit early just to make it convenient for everyone. So next we have investment loans. We have conventional DSCR, the private hard money loans, construction, renovation. So the one here that you've probably heard of before, but maybe not super familiar with, is the DSCR loan. Anyone know what that stands for? DSCR. Debt servicing coverage ratio. So the idea behind the DSCR loan is that if the rental income will cover the mortgage, then you can get your loan and you don't have to qualify for a debt to income ratio. We don't have to collect documents on expenses. I have a client that owns
And who's qualified?
how do you qualify?
Who's qualified? Everybody's qualified? Or is it
Well,
percentage?
as long as you have the right credit score and the down payment. So that's the way that
What's the percentage of down payment?
20% down needed on this one.
Okay.
So that's the way the bank said, well, we don't really care what your debts are. We know that you're gonna be getting this rental income here that's gonna cover your bill. So as long as you have a good credit score, make sure you're responsible with your bills. And you can have 20%, that way we don't have to foreclose and have a loss on our hands, then they're willing to give out this
What
loan.
was the credit score?
Generally 700, 720, right around there. So, the other cool thing about this, the DSCR loan is, I have a client with 20 properties. So if I get them a full document loan, I'm gonna have to ask every single property, the property taxes, the mortgage statement, the homeowner insurance. So that's, sometimes the borrower just doesn't wanna go through all that work. And they like the DSCR loan to make it nice and easy. All I need is just, credit report and, we go off the rental income of the property. So it's real simple for the paperwork. So that's a good one to know about for investment properties.
What about conventional? Did we talk about conventional?
Yeah, conventional is basically, and you're just,
Because it's most of the, one of the most popular,
yeah, so these are your standard loans that
the factory are the best in.
that we generally hear about all the time. However, one thing I did forget to mention is that we have the 30-year, the 25-year, the 20-year, and the 15-year.
Yeah.
So usually we only hear about the 30-year and the 15-year, so people are often surprised when I tell them they can do a 20-year or 25-year. So that's kind of nice if someone, maybe they want to retire in 20 years. And so they don't really like the payment on the 15-year, but they like the idea of paying off the loan in 20 years instead of 30 years. So there's these in-between options that can work out to be a good choice for the right borrower. So the next category I have is unique loans. These are just things that we run into that, again, you might not have heard of some of these. My goal is that in doing this part of the class today, my goal is that you learn about something that's out there that you didn't know about. That way, you kind of expand your knowledge of the loan programs. So we have bridge loans. When someone's moving from one property to another, they can borrow up to 70% of the house's value that they're selling. So then we can take that money and use it for the down payment on the purchase. So that's one thing that's good in this market right now is the bridge loans. We have the primary residence construction and the renovation loans. We have the HELOCs, which are the home equity lines of credit. With that one, most people have heard of the home equity line of credit on a primary residence. Well, I also do those on investment properties. And that's pretty cool to be able to, some people, they put a low down payment on their primary residence. Maybe they got an FHA or 5% down. but then they have all this equity on their rental property, renter properties. So we can go ahead and get that home equity line of credit against the rental property, and that way they can use that to either pay off high interest debt or use that as a down payment on their next investment property, which is a very common way to use a HELOC on an investment property.
And what are the qualifications for the HELOC?
For the HELOC, you have to have enough equity. So depending on the type of property, there's different limits on the equity. And then you still have the debt to income ratios to calculate. Credit scores, they can go down as about 620, right around there. So yeah, it's a really popular program. I have one that I can close in as little as 7 days. And that's really cool too, because if you walk into a bank and ask for a HELOC, they're probably gonna be about a 45 to 60-day turnaround time. So if someone really needs to tap into that equity and you're writing up an offer for them and they need something fast, 7 days later, I can have their HELOC funded, and then they have that extra money for that down payment. So we have interest-only loans, variable rate loans, jumbo, super jumbo. I asked one of my wholesale lenders the other day, what is your limit on your super jumbo loan products? And they literally have no limit. They said the highest they've done is about 60 million, but they can go higher than that if they need to. So then we have land. A lot of people don't realize you can finance land. People think that you have to pay cash, but actually I have a lender that will finance land. I've done that. And that even goes up to about 75%, depending on the credit score. We have mobile home financing. I've done that a few times. Non-citizens, we have tons of programs for those. Pre-underwritten, if I have a pre-approval that's kind of iffy and I'm not sure about something, I'll go ahead and put it in front of an underwriter. We'll get pre-underwritten before you even write up an offer. So those are a great resource to have. Reverse mortgage, a lot of things people don't know about that is you can actually do that loan on a purchase. So let's say you meet a senior, or maybe you're talking to your parents or grandparents, they want to buy a house, but they don't have a job, or they don't have any income at all. That's actually okay for that reverse mortgage. They can actually purchase a house with no income on a reverse mortgage.
So you need like somebody to sign for you.
Well, you just need to, in a reverse mortgage, the qualifications are pretty simple, actually. It's just based on age and then, some things on like net worth, and credit. So other than that, they're not too tough to qualify for if everything pans out.
And what's the down payment on that? Yeah.
So that does, it's a very comprehensive equation depending on all the factors with the reverse mortgages, because they do an equation where they take the age and they're calculating like how likely they are to survive, and so it gets pretty tricky in terms of what your maximum loan to value ends up being.
What is the minimum age?
What's the what?
The minimum age.
Minimum age 62, I believe. So then we have permanent versus temporary buy downs. Temporary buy downs were real popular last year with the high interest rates. People were talking about doing the 3-2-1, the 2-1, the 1-0, and almost every single time I've priced out a temporary buy down versus a permanent buy down, the borrower always chooses the permanent buy down. So as nice as it sounds, those temporary buy downs, real quick, the way those work, instead of if the market rate is 7% today, then you want to do a 2-year buy down. You can start at 5% the first year, 6% the next year, and then 7% the third year. So the thinking is that you would just refinance in 1 to 2 years and not have to pay that full 7% rate. But still, each time you compare the two, the permanent buy down is usually the better option in general. Then we have a loan for someone with no credit scores. So if someone says, you know what, I don't have any credit, I just moved here from another country, or I pay cash for everything. They love Dave Ramsey, so they don't borrow money, they use cash with everything. Whatever the reason, no credit scores, usually not a problem. All we have to do is collect 3 bills. So we're talking cell phone, utility bill, and as long as we get 3 bills, and if they don't have a bill in their name, they can.
But what is the guarantee that you have with people like that? I don't have any record and just moved it. What is the guarantee that you guys have?
The guarantee that, of what?
Okay, this is, access.
That he'll,
That will pay.
yeah.
Yeah.
So we do look at the alternative credit sources, and we do look at them to see that they're making their payments on time for the last 12 months. So we are looking at the
So we
credit.
need to leave you for like at least 12 months.
Yeah, they would need to be on the bills for at least 12 months.
And
Yeah.
that's what you guys need the records, you guys can call those providers to see that we're on time.
Yeah, we'll collect the
Because
documentation.
I had it in some situation like that.
Yeah, 12 months. Sometimes I run across someone who only has had a utility bill for 6 months because they're moving around. We might need them to wait 6 more months till we have 12 months of documentation, or get them added to a utility bill and then do their loan 1 year later. So, but most of the time, people have had 3 utility bills that they can pay already.
Are you gonna talk about like international, somebody wanna buy in a different country?
So the non-citizen, if they don't have their social security, yes, we have a lot of programs for that.
What do you do?
Yeah, so
Is it like double the interest for them?
no, it's not too bad. It's a little higher, but it's not too
It's
bad.
around like 9, what is it?
It can vary a lot. Depends on if they have a credit score or not, and
Nah,
how much the down payment is. Yeah, it's gonna be over 7. I can tell you that. Yeah.
Oh, excuse me, someone's trying to get in.
What's the what?
Someone's trying to get in.
Oh, thank you. Yes, all right. Yeah, questions are great. People coming. Oh, there are people chatting with me. Let's see. Oh, no, that's familiar. Okay. So yeah, if you ever have any, if you ever want to dig deeper into any of those programs, yeah, feel free to,
yeah, I will.
Reach out to me later, we can-
But it's gonna be, I'm gonna have to
Yeah.
give you a call.
yeah, no problems, yeah, anytime. So then we have our non-QM. So our non-QM, you've probably heard by now, that's basically the new subprime. So subprime is what we called these loans back before 2008, when we had the mortgage collapse. The subprime loans were the majority of the problem. Now, they restructured that, and now they just call them non-QM. So they still exist, they're just called something else. Now, the non-QM means the person does not fit the regular guidelines for a regular loan. And they need to have these other loans where the banks are willing to take on a higher rate of risk than what Fannie or Freddie would recommend. So we do have a 40-year fixed. That comes up every once in a while. The rate is a lot higher. It usually doesn't make sense to do the 40-year fix, but we do have that as an option. We have manual underwriting, so if we can't get approval in our software, which we call the DU approval, then we can submit things with manual underwriting. Then the underwriter's just gonna look at the plan and see if it makes sense and see if they want to fund on it. We have the bank statement loans, either 12 months of bank statements or 24 months of bank statements. And we collect those, add up all the deposits, and then work off of a percentage of the deposits. So that's real good for someone who's self-employed. They're taking a lot of expenses, which lowers their net income. But if they have a lot of deposits in their bank statements, then that can be a good loan program for them. We have a P&L program where they just submit a profit and loss statement, and we go off of that. Just needs to be certified by a CPA or an accountant. We have a 1099 loan program. With those, we just collect the 1099 document, and we can actually use up to 90% of that income, which is really awesome, because if you're self-employed, you're probably using about 50% of deductions there in your expenses. So to be able to use up to 90% is a pretty good, generous amount of income you can use on a 1099. You have asset depletion. Sometimes we run across people who don't have regular income, but they just have a lot of money in the bank. We can do a calculation there and use that as income. And there's also the commercial properties, apartment buildings, business loans. So that is the summary of all loan programs, basically. Any questions on that section?
I like the bridge number.
Yeah.
That can come in real handy right now.
Really handy now.
Another was an asset depreciation.
Yeah, the asset depletion one is great. Usually it makes sense if they have at least like 200 to 300,000 in the bank. It could be in anything that's liquid, whether it's a savings, checking, money market, even an investment account is fine. So yeah, that could be a really good.
So how are you doing? How are you calculating that?
The asset depletion, there's an equation where we do actually require them to, we figure out what income we need to have the debt to income ratio work, and then we work it backwards. So we say, okay, this person needs, $4,000 a month. So then we make sure that they can pay themselves $4,000 a month for the next, I think it's 4 or 5 years, right around there. So as long as there's that much in the account, then we can use it. And then, so we do have to have them make that first payment, and then we can fund the loan after they make, and then we just assume that they're gonna keep making that income payment to themselves. So that's the simple answer on how that one works.
What about the buy downs?
Yeah, the buy downs are great. A lot of times these days with these higher interest rates, people can't afford the payment for the house they want. So buy downs is one I look at right away. First, I look at loan program to see which one's gonna give them the lowest interest rate and the lowest payment. Once we figure that out, then I'm gonna look at buy downs and see if that's a possibility. Because if they like a certain price house, but their payment reflects a house that's $100,000 less, well, we need to bridge that gap somehow. And the buy down is either gonna come from the borrower or it's gonna come from the seller giving a seller credit. So it generally doesn't matter who it comes from, but somebody's gonna pay a little extra money to buy down that rate, which will then lower their payment. So, I generally do that every single time if someone's finding that they're not quite qualified for the houses they're giving their realtor.
Oh, okay.
It's just an automatic. We look at, because I deal with a lot of first time home buyers.
Yes.
Pretty common with them.
Okay, great.
So what did you promise us about like the real co-working? What is the tips or whatever you can give us to increase the business?
That's next. Good segue.
Just like, where is that?
Where's the
Yes.
stuff,
Yeah, there's the good stuff. 10 ways your lender can help you grow your
Yeah,
business.
I like
Oh, there
those,
you
but
go.
I wanna hear this better.
Yes, that is.
Then I know too.
Yep, that is what we're here for. So yeah, the loan programs were just a little something that they're out there, a little education piece of it.
Yep.
This part is really the giving back part, like, hey, how do we get more leads? That's our job. Get more leads and sell more houses. So number one, you can ask your lender to have a talk by phone or in person about how to grow your business and what ideas they may have. The more successful you are, the more successful they are. So even if it's your first lender you're talking to, or your second, or your third, or your fourth, or your fifth, they should all be very open to having that conversation. They deal with a lot of different realtors who are doing a lot of different things, and so they should have some ideas. In fact, we were just talking about farming and door knocking, and there's always a little something that can be added in there to make sure that you're getting the most efficiency out of your business.
Farming today.
Yeah. Now, I have a little advantage on this one over other lenders. Before I was a lender, I was a realtor. So has anyone ever had a loan get canceled or an escrow get canceled because the lender's fault, basically?
Yeah,
Right? Or it goes late because of the lender's fault?
yeah.
So when I was a realtor a long time ago, I got tired of that happening. So I decided that I would go become a lender. I remember one day the loan docs weren't arriving at escrow, and I'm like, what the heck, what's going on? And so I called escrow, I called the lender. It turns out 6 hours went by and nobody knew that the loan docs were emailed to the wrong person.
Oh.
And I just thought, for me as a realtor to be realizing this is not That's not how it should work. So I got into lending and now I get to help realtors have a great experience and I'm always shooting for that perfect transaction. Number two, share your business plan with your lender and ask them if they have any ideas of how to make it even better. So I actually got my real estate license in 2001 when I was 24 years old.
Oh, wow.
So I've been in the industry quite a while and I've actually spent 10 years with Keller Williams Realty in Huntington Beach, Los Alamitos, San Diego. And so I'm very familiar with Keller Williams Realty and the models, the business models, the financial models. And so I really enjoy sitting down with realtors, either in person or over the phone, and saying, hey, what can we do? What's your business plan look like? How can we make it even better? How those are your goals? Okay, let's double it, just trying to make things as best as possible for you. So number three, increase your lead conversion. So lead conversion is always an important one because as a realtor, we tend to, work the lead, work the next lead, work the next lead. And then what happens with those ones from a month ago or 2 months ago or 3 months ago? Anyone ever, look through your leads and realize that you forgot to follow up with one a little while back? So lead follow-up and lead conversion is a really great opportunity to take some old leads and turn it into new business. So with this, you can ask your lender to help you track and convert your leads. So when you get a chance, either go through like the last month or the last year, look at all your old leads and see which ones were referred to which lender. Contact that lender and say, hey, have you followed up with this lead? Where are they at? Especially if they couldn't get pre-approved. What did that buyer need to do to pre-approve? It was a year ago. Have they saved up the money they needed? Have they fixed their credit? Are you doing anything to help them fix their credit or following up with them? If that lender does not have a system for following up with that lead, because a lot of lenders are too busy and really not interested in waiting till someone works on their credit, that can take years. I do that with a lot of my leads. So I give them homework. Whenever I have a buyer that can't get pre-approved, I give them homework. I say, okay, here's your 5 items that you need to work on. When is a good time for me to follow up on this homework list? And usually it's at least 3 to 6 months out at a bare minimum. I'll put a date in the calendar. I'll follow up with them. I'll pull up their contact, say, hey, you have these 5 homework items, how is that going? And a lot of times I might have to refer them to my credit repair specialist and let their credit, get worked on. So there's a lot of different things that can be done to help turn your old leads into new business. So that's a great way to find some new business for you. And then other systems, come up with some system to follow up leads with your lender, whether that's doing a weekly phone call or a monthly phone call or an Excel sheet or a database. For a lot of the realtors I work with, once they send me a few leads, I start an Excel sheet and then I'll email it to them every week and I'll say, okay, here's the 7 leads you sent me. This is where they're at. And then that way they know they're going to get an update from me every week, no matter what's going on. Because as a realtor, it's tough. You wear 100 different hats. And as a lender, I wear one. So I know that if I can do anything to help your job, that's going to be even better for you. So number 4, you can work with your lender to create videos and other marketing material for both of you to share with your spheres of influence, either on social media or any of your marketing. So you want to provide something of value when you're thinking about your content. Maybe you're targeting first-time home buyers. You're letting them know that if they don't need 20% down, they can actually do 0 down or 3.5% down. One thing too, when reaching out to your partners, we talked to Mark today from Title. If you tell yourself that you're going to go farm to 500 people this month, what are the chances that if I ask you in a month that you've done that, you've started farming to 500 people? Probably not super likely. But if you tell your lender and your escrow officer and your title rep and your team leader and your mom and your
That's
brother
pressure.
and your dog, yeah. And you tell them, I am gonna start farming to 500 people this month. Well, then, what's the likelihood of you starting that?
Yeah, and
You're
the
gonna be
pressure
more-
is on.
So that's another great way to use your lender, use your preferred vendors, tell your home inspector. The more people you share
It's
your
true.
plans with, the more likely you are to actually follow through.
About these videos, do you have like a little scripts or something about different topics?
So that's where your preferred vendors will come in. You can do videos with escrow officers, title reps, lenders, and usually when a realtor reaches out to me to do a video, I'll ask them, what do you want, what content do you want to do? And then we'll either do it where I'm interviewing the realtor's interviewing me, maybe we're talking about the market, maybe we're talking about different loan programs, so it just depends on the goal of the video and what kind of buyers you want to attract, or sellers for that matter. So what kind of people, what kind of leads do you want to attract from doing that video and doing that marketing piece? And you're gonna be more likely to do it working with your preferred vendor, and you're gonna have someone who already has content.
Let's say for first time home buyers.
For first time home buyers, like what kind of content to do in the video? The biggest misconception for a first time home buyer, they think they need more down payment, 10%, 20% down, so we always tackle, you don't need that much down payment. And we always talk about, talking to the lender early, talking to your realtor early, because a lot of first time home buyers are ready and they don't realize. So you're trying to get them to pick up the phone or reach out to you and say, hey, I saw your video and I want to see if maybe it's the right time for me to start talking about it. So those are just like some more popular ideas of what kind of content to put on the video. So number 5, ask your lender to do cross qualifications on the strongest offers on your listings. Is anyone doing that right now, your listings?
Again,
Is anyone having their preferred lender do a cross qualification on the offers that come in on your listings? So
what
this
that
is
exactly?
important because if you've been in the business a few years, you've probably had a transaction where you saw the pre-approval letter. Maybe you called the loan officer, hey, I just got an offer from your client at 123 Main Street for 900,000. Are they pre-approved? The loan officer says, sure, they're pre-approved, no problem. And then you get that phone call 2 to 3 weeks in the escrow saying, well, they weren't really pre-approved. We didn't realize that they've switched to part-time job and now we can't use their income and now they can't do the loan, so we're gonna have to cancel escrow. So if that hasn't happened to you yet, that's great. I hope that good luck stays with you. But it's more common than you might imagine. So what you do to that to make sure you try to avoid that situation is when you get that strong offer on your listing and you're about to tell your seller to accept it or open escrow, then you can call your preferred lender and say, hey, can you do a cross qualification? The cross qualification can look in many different ways. There is a there's a soft cross qual and a hard cross qual. So there's a couple different options there. I usually start with a soft cross qualification where I talk to the other loan officer. Hey, your buyer, Mr. and Mrs. Smith, put an offer on this house. Are they pre-approved? He said, yes, of course they're pre-approved. And then I actually asked for the documentation to prove it. So we're gonna look at their income, their bank statements, proof of funds. We're gonna see if they really did do their due diligence or if they just kind of, wrote a letter and never finished doing the pre-approval letter. I've had situations where I was representing the buyer where if the listing agent would have called me, I would have said, hey, give me a couple more days. I'm trying to get a document from the buyer. But they don't. Most realtors don't do cross qualifications, but they can be really helpful. Just takes, a couple more phone calls and you have your confidence that you can tell your seller. So it makes you look good in front of the seller. Mr. Seller, I had my preferred lender call their lender. They checked everything out. This buyer's good to go. So they're fully qualified to buy this house, and you're gonna look better for your client when you do that.
Project.
I just had a listing appointment and I did let her know, and she was asking me, will they do that? Will the buyers do that? I mean, if they really want the house.
Oh, yeah, they will.
They will,
Mm.
because I tell her that's one of the things I'll do, because I had that experience 2 times where I went into escrow and then it fell through because of the loans. They're like, oh, we didn't do the pre-approval, like,
Okay. The renting to you.
yeah, the DU.
Yeah.
So, yeah.
Yeah, those letters, if the letter says, pre-qualified,
Mhm.
that means they probably don't have DU approval and they don't have all the documents.
Right.
If it says pre-approved, they should have DU approval and they should have all the documents, but they don't always have that.
Mm.
So, yeah, it really takes the lender to talk, to really dive into that and see what's going on.
And that doesn't mean they're gonna go with that lender, right? With our lender, it just means that we just cross qualify.
Yeah, the cross qualification is not meant to try to get their buyer to switch to your lender.
Just to check that they're qualified.
Yeah. That's not, yes, it's just to make sure that the other's qualified.
Like you said, you wanna represent, you wanna show your seller that you're doing your job, you know?
Yeah, exactly.
You check in, you know, the offers that.
Now, I've had situations where I was cross qualifying someone and I couldn't get a hold of the lender. And then the buyer couldn't get a hold of the lender,
Oh, wow.
and then they decided to use me.
Oh, there you go.
See?
So as a lender, yeah, we wanna do it because we might get business, but more importantly, we're really just doing it to help the realtor have a strong escrow.
Yeah, that's good.
Yeah, the cross qualifications are a great resource. If you haven't done one of those yet, ask your preferred lender about it. Number 6, you can organize events with your lender, like first time home buyer workshop, past client appreciation party, a community yard sale, a fundraiser for someone in the community. So the events are a really great way to really expand your sphere of influence. Now, I've done events where we did tons of marketing and calling and prospecting, and maybe one person showed up. And the realtor was like, darn, it's only one person, what a failure. And I said, no, it wasn't a failure, because you just sent out all this marketing material to hundreds of people. They saw your name, they saw your information, they see that you're doing business, they see that you're hustling, they see that you're putting out important information to the community. And so you want to be front of mind. So the fact that only one person came up to that one event, it's really not the ultimate goal there. It's just to be out there, putting yourself out there, grow your sphere of influence. While you're promoting your event, you're probably adding people to your database. Maybe you're adding the event to your monthly newsletter or whatever you're doing to hit up your sphere of influence. So it's just an idea to expand how many people that you're putting yourself in front of, either in person or emails or phone calls, and give you something to talk about. When you have a story to tell as a realtor, then it's a lot easier for people to say, oh, that person's up to something. They really are professional and organized. Look at their marketing. Look what they're doing. I am thinking about buying a house this year. I think I'm gonna call this person.
Yeah, because I was thinking also of doing the first time home buyer workshop,
Mhm.
and I was like, what if my number shows up? But
Yeah,
it's good that you said that about, like, you know, us, you're showing up and people are seeing it.
Yeah.
If you're doing something.
and you'll get a lot of people that say, I can't make it because I have to work that day or I'll be out of town. And then you can say, would you like me to send you the materials, or would you like to hear when the next one is? And so you're starting this dialogue.
Yeah. What days do you recommend doing the workshop, like weekends or weekdays?
I generally do them on weekdays.
Weekdays?
Yeah, so weekends, sometimes people are out traveling and doing things on weekends, but weekdays have worked well overall. A lot of times either 5 o'clock, 6 o'clock, or 7 o'clock. So you're gonna catch people as they're coming home from work, basically is the thought.
Oh, thank you.
And I do workshop at least once a month. So I try out different days and different times, depending on the target audience, and kind of see what works for the target audience too. Yeah, or sometimes I've had someone say, I can't make that one, but if you have it later in the day, like at 7, then I can make that one.
Oh, okay,
So guess when my next one's gonna be? 7th.
7.
Then I'm gonna reach out to that person and say, hey, I got one coming up in a couple weeks at 7 o'clock after you get off work. Hey, you wanna stop by? You know anyone else who would wanna stop by? And that can work, just be another great way to keep in communication.
What about for the community yard sale?
Yeah, the art sale is a great opportunity. When you hear, I've heard agents talk about this at like mega camp and family reunion and stuff where they're on the panels. And the top agents, when they do their yard sales, their organized yard sales, they're getting sometimes 2, 3, 4 listings just out of that one event.
Yeah.
So they're reaching out to their community, they're saying, I'm organizing a community yard sale next month. It's gonna be from 6 AM to 11 PM on Saturday. Please let me know if you will be participating so I can stop by and, so I can put you on the list. So then the yard sale event actually has a list of addresses to go to. So, and then the realtor can advertise that list. Like, hey, here's 10 houses that are having a yard sale this Saturday. And then you just blast that everywhere.
Like you do it by like block or neighborhood, I'm assuming, so they could be all together, no?
Yeah, it works better for, if you're farming,
Oh, okay.
that would be the ideal, thing to add to your farm is a community yard sale.
And how do you do the door knocking? You go door knocking?
Yeah.
Let them know?
Door knocking even better, yeah, send a mailer, do door knocking, your usual things, but now you have a story to tell.
Oh,
Hey, I'm doing this yard sale, the community, this is going on, you're meeting homeowners, sometimes you're meeting renters, and they need to buy. So you're just meeting the people in the community that you're farming, and you're offering something of value.
okay.
Yeah, I mean, we're in July, but springtime is when you usually see a lot of these things.
Yeah, I was thinking of doing also something like that.
So now is a good time, if you do wanna do it in the springtime, you can start planning for next spring. You can partner up with your preferred vendors, whether it's a lender, title person, whoever, and they can help you put together flyers and, kind of organize the event too.
And then you recommend just kind of doing it in your community or anywhere?
You can do it anywhere, but when it comes to converting leads, multiple contacts is ideal, right? So if you do one yard sale, that's great, but if you do one yard sale in the same community every year, well, that's just gonna increase every year that you do it. So whatever you do, you wanna think about multiple contacts.
Okay.
All right, doing pretty good. We got about 15 minutes left and we're on number 6 out of 10. All right, number 7. Ask your lender if they would like to join you at an open house. Some lenders might say, sure. Some lenders say, I don't work weekends. Some lenders might say, I live in Nebraska, sorry, I can't help you. So you might get different responses to this request. But either way, it doesn't hurt to ask. And, you should have at least 5 lenders on your list anyways. So feel free to call number 1, then ask number 2, ask number 3, 4, 5. And out of the 5, there's probably one that will join you for an open house. It should be a great opportunity to learn about the lender's business, talk loan programs, talk marketing, talk how to get more leads. You're in this together, right? Lender needs more leads, realtor needs more leads. So you have a common ground to work on there. And the lender will learn more about your business. So if they learn more about your business, they might learn something about you. Maybe that you're an investor yourself, or you've done a lot of relocation projects, or something that they didn't know, so that when they have a lead that goes to them and they have a buyer that needs a realtor, the better that they know your business, the more likely they are to hand the lead over to you. So open houses are a good idea to try that out and have that. And also, you never know, sometimes. Another thing I like about having 2 people at an open house, and this could be a lender and a realtor, or 2 realtors, or a team. But sometimes the person that walks into the house connects with one person more than the other. So they might not connect with you for some reason, but maybe they connect with the lender, and then they're chatting, and then they get them, to fill out the form and this and that, or vice versa. Maybe they don't talk to the lender, but they talk to you. So always a nice thing to do to try to have two lenders or two people at a open house. Number 8, schedule appointment where both of you are tasked to bring 30 posts that you can post to your social media. So you might not have the content for 30 posts right now, so maybe you bring 5, maybe you bring 10. But you look on the internet, talk to people, talk to your team leader, talk to your mentor. What are some things I can post on my social media? You bring as many as you can. You ask your lender to bring 30, or whatever number they can bring. So if you bring 30 and the lender brings 30, you should have then 60 posts to post on your social media. So if you do that in one appointment, now for the next 2 months, you have your post ready to go. That way, every morning at 9 a.m., post number 1, click, paste, done. Next morning, 9 a.m., copy, paste, done. That's like a 30-second to 1-minute task every morning compared to getting up in the morning, seeing what fires you need to put out. Oh, I gotta do a social media post, keep putting out fires, go to appointments, answer the phone. All of a sudden the day's over and you never had time to do a social media post.
That's,
Yeah,
but I mean, I want to improve that.
that would be a huge help to do it that way.
Work with the post content.
So in this example, if you're gonna bring 30, the lender's gonna bring 30, that kind of thing. For-
30.
Yeah, so, or it could be, let's say you wanna tone it down, you wanna do like 5 the first time.
5 a month.
So you're gonna do 5 posts and the lender's gonna bring 5. So you're gonna you do a lot of things. You could go to other realtors' Facebook pages and just see what they're posting. You could join Facebook groups, you just type in realtor memes, so you basically find it online.
And also, I can share with you, there's a website, I pay $35 and they already have the scheduled post for realtors.
Mhm.
Everything is in there, like in a category 2. I get a lot of that. I only pay for $35 a month.
Yeah.
It's worth it. I'll share with you the website.
Do you know do you remember what it's called?
Yeah, and I
Keeping-
have 2.
Keeping matters current is a good one.
Yeah,
They'll give you content.
it's coffee and contracts, one of them. That one's 55. It's a little bit more expensive.
Okay.
But I also use Aesthetic Realtor,
Okay.
and that was 35 a month.
Okay.
Yeah.
Yeah, static realtor, what was the other one?
Coffee and contracts.
Copy and contracts, and then keeping matters current. So those are 3 places that you can go that you might have to pay money for, but you can get a lot of.
The content's already there. You just go to Canva,
Okay.
edit it, put your picture, your personal picture, and it's good to go.
Okay,
Yeah.
perfect.
This one, look.
And if you're the type of person that will never get on a website, pay for content, post it, if you just do not like technology at all, there are a lot of people out there that will do it for.
Yeah,
for
this one.
Okay.
Yeah, Aesthetic Realtor, and then, and then you have it tells you all the month, you have a dashboard, and it tells you June, May, and that whole month is ready to go. And this is the most, like affordable one, like 35, because coffee and contract is 55.
Okay.
Yeah.
Yeah, I forget how much keeping matters current is, but I think it's around.
So the way you get it done for it. Everything, if the posts are in there ready to post, and also with the captions,
Mm,
so it's really easy.
Are you serious?
The captions are there too.
Okay,
It makes your job a little easier, but of course you can like automize it to your personality.
yeah.
Yeah.
So you can post it on your personal Facebook page, your business Facebook page. If you don't have a business Facebook page, you should get one. That's a
Yeah.
great way to get a database going. Your Instagram, pretty much whatever you can think of. And then a lot of people that are posting online, they'll post on one and then it'll post on the other platforms at the same time. So that's a great way to be efficient as well.
35. It's really good.
So number 9, review your leads for the past month.
Yeah.
I thought this was number 7. Let's see. 6. Somehow I said this one early, I don't know how, but basically I already talked about this one, number 9. If they're, I guess the difference between lead conversion and having a lender, work the leads that were not pre-approved specifically. So these are the ones that are not pre-approved to make sure that that lender is doing what they need to do to get them pre-approved. Number 10 is just attending networking events with your lender to expand your sphere of influence and their sphere of influence at the same time. So you're probably going to be more likely to go to a networking event if you know someone there. So if you see one that you want to go to, but you're not sure if you're going to know someone, you can invite your preferred lender, one of your preferred vendors, have them go with you. And then that way, you know, you don't have to like show up by yourself, have more fun. It's a little easier to network when you have, you know, at least know that there's going to be someone there.
Do you create flyers for open house?
Yeah, so I definitely do, it's called, the shared marketing flyers, where if a realtor sends me just their photo and logo, I'll make a flyer for the open house and it'll have both the realtor and the lender's information on it. And, we can also choose to have like a few loan programs on the flyer if you want, and that would show the people that walk in with a payment, the estimated payment. So, so yeah, those are always good to have. Maybe if you don't like to do your own flyers for open houses, then teaming up with a lender just to do the open house flyers is an easy way to not have to do that.
I like that automated, payment, that's a good option.
Yeah,
Thought of that.
we usually do, like an FHA loan, a conventional 20% down and a conventional 10% down.
Mhm.
And then depending on the area, maybe a VA loan, or depending on the specialty of the realtor, maybe a VA loan. Those are the most popular ones that I usually put on there. And then, it'll have a breakdown of like, what's the interest rate at, what's the total payment come out to. So when you hand them the flyer, they're not only looking at the house, but they're looking at what would it take to buy this house.
Okay.
There is a program, it's not coming from, the lenders use is for realtors
Mhm.
and for marketing every day.
There's list reports, it's probably the most popular one.
Probably.
Yeah, so probably that
Do you
one.
have that?
Yeah, I'm on list reports, so that can be used again for like flyers and marketing. And
I will love that.
yeah, so I can
I was
definitely share some information like that. with
And
you.
also, I'm not sure if it's this report, but you can make a graphic when you have an open house, when it's releasing,
Yeah.
and you can present that to potential buyers,
Mhm.
how the market has been changing by years.
Yep.
I think it's in this report.
Yeah, and I like keep matters current for stuff like that, because they're generally about the market. Like following the market and all of their content, their whole business plan is to create content for realtors and lenders to share in their marketing. So, so they have a lot of stuff like that, a lot of stuff to choose from.
But you have these reports for the agents.
Yeah, list reports will do some marketing, and, but that's not quite as much as keeping markets current. It'll kind of like automatically generate flyers and things like that. Yeah. So,
Okay, so I send you an email?
sure, yeah, and then that way we'll just kind of follow up on those details.
Okay.
Yeah.
And how much is keep that going?
I don't remember, I think it's around that same price range, 30, 50, yeah, somewhere around there. So yeah, I get their daily emails, so I look at their stuff, you know, almost every day. See what they have.
This report is very good for us.
Yeah.
It's free.
Which one?
This
List reports,
you
yeah,
can Provide us.
that
It's
one,
free marketing. Okay, yeah.
yeah, that one I can share some material on that.
Okay, yeah.
Let's see, so we have the networking events, okay. So that's pretty much it with the 10 ways to help your lender grow your business. So any other questions on that? Topic?
She's the one who's in most interested in kind of pick up.
Well, at least it's all recorded, so.
Yeah, it was really helpful knowing about the loan programs and then also, you know, all the ways we can generate leads.
Yeah,
Thank you.
my goal here is to help you think of ideas to grow your business, because without leads, you got nothing to do, so we need more leads, more leads, more leads.
You need leads so you can close them.
Mm-hmm, exactly, yeah. So I'll just end it with the number one question I get from realtors is, what are the rates doing?
Yeah.
So I'll just share a slide on that real quick before we wrap it up in almost exactly an hour. So for a 28% down, someone with perfect credit, conventional loan, it's right at 6.9% for that kind of scenario.
Do you have a place where we can go, like, I see somebody today and they ask me, what is the rate today?
Mhm.
I can say something, but tomorrow something
Yeah.
different.
I think,
You had daily something up there?
yeah,
Or something?
because I used to be a realtor, I know that you get that question asked as well.
Uh-huh.
And you don't wanna just ask your lender every time that you
Uh-huh.
get asked, because a lot of times the lender will say, well, it depends, it's an FHA, what's the credit, you know, they don't wanna just throw out a number
Yes.
with no scenario in mind, because then what if that person says, oh, you said it would be this. So I actually am a step ahead of you on that one, and we just have to move this down a little bit. So mortgagenewsdaily.com.
Oh,
That is my favorite source to watch the rates on a platform that's public. So you can go to it, you can share it with your clients and sphere of influence. Mortgagenewsdaily.com. Yeah, make that a bookmark. It's not my site, it's just a site that tracks the mortgage rates, and these rates are based off of the average rate lock across the nation. And it is based off of a 20% down, someone with perfect credit. This is the 30-year fixed, but when you're in there, you can always just click on these other loan programs here.
oh, this is the one who comes with an article and everything.
Yeah, they have articles every single day.
Oh, yeah. I
They'll
see.
say exactly what's going on, and
Mhm.
you can click on the 15-year FHA jumbo arm, you know, you can kind of compare all the loan programs. So it's kind of fun just to click around and see how things, you do the 1 year, the 5 year. So right now I just took a screenshot of the 5 year. I'm sorry, the 1 year. So right now we're right at that 6.9 there. Actually, bam, there. So we got 6.9 right now. As you can see, the last day or two, they've been going up. We're looking at the blue number. The blue number is Fannie Mae, so that's the most common mortgage type. So we're looking at the blue number. It's been going up the last couple days, but it's been going down the last week or so. And then overall, it's been going down the last few months. I don't know how to scroll down a little bit to see this here. But basically, since this is the last year, this big drop was right around January. So did anyone notice a pickup in business around January of this year compared to last year? If you did, it's probably because the rates went from 8% at their peak all the way down to under 6.75%. So they dropped more than a full percentage point in less than 30 days. That's about as big as a drop as you'll ever see. And so last year, 2023, we just had rates going up. And that was the slowest year in sales since 1994.
When?
Yeah, so
Last year?
yeah, if you haven't heard this stat before, 2023 was the lowest year in number of transactions in the United States. So with the lowest number of transactions since 1994, that means even during the financial crisis of 2008, we still had more real estate sales going on in 2008 than we did in 2023. So if you survived 2023, congratulations. You did it. You made it past the worst. And we are now back into more of a normal market now, with the rates, you know, hovering in the 6s, maybe low 7s. But that's actually a pretty normal place to be.
Many buyers in 2020.
Mhm.
And
Yeah.
nobody have money.
Yeah, and you have the high prices and the higher rates, and that just got everyone stopped last year. Plus, when the rates were up near 8%, and sellers needed to sell, they didn't wanna give up their 2.5% mortgage and go buy a house at 8%. So the inventory was really low last year, and it's already starting to increase this year.
Do you have any predictions now with the market for the elections?
Any predictions? Well, we already have the Fed that's kind of announced that they'll be lowering the rates towards the end of this year. So that would be around election time.
With elections,
But it's not because of the elections. They're doing it because,
is the time they will.
because of the inflation and the job market. And so the inflation is coming down closer to their target rate of 2%, and then the job market is starting to get worse. So the reason why they plan on lowering the rates at the end of the year is to avoid a recession. Yeah.
And do you know, around what rates are they looking to?
Yeah, the predictions are one rate cut in 2024 and towards the end of the year, and that would most likely just be a quarter point of a rate, which isn't a whole lot. I mean, you can see this market volatility on the screen is more significant than what the Fed's doing, because this is more based off of like supply and demand and how much inventory there is, how many people are buying, and what's going on with the stock market and all kinds of things, so.
But I've seen some pre-approval from some buyers that it's like 5.0, like
So
how is that?
they're probably doing a buy down, most likely,
Okay.
and that could be a permanent buy down or it could be a temporary buy down.
Oh,
So, yeah, I just closed a loan 2 days ago, 5.25,
okay.
and that was just a buy down.
Okay, gotcha.
All right, we're at exactly 1 hour, so thanks for attending today, and
Thank you so
yeah,
much.
no problem. Anyone can feel free to reach out to me if you have any questions. It's my contact information. And